mid-cap is a story. It's a long-term India growth story. Mid-cap is a story of aspiration.
I think the track record of the fund management team, now today the Bandhan Life has got 18 years of track record. That at the end of the day, wealth is created not by a single fund, not by a single stock, but on the basis of their asset allocation, the right kind of asset allocation. Any time is good time as long as it's for a long time.
Market ups and downs will continue. What is important is not the time, it's timing. That is very important.
Correct.
Start early, keep a plan, stay invested.
Welcome to the Insurance Architect. In the universe of endless content, why another series? Well, because while life insurance companies are great at talking about what we sell, we rarely talk about why we built it. Behind every new product, new fund, new decision is a strategic blueprint. We believe you deserve to see it. And so, we're pulling back the curtains. I am Shabnam Manji. My day job is to ensure that my brand speaks clearly to your needs. But in this chair, I am your advocate. Join us as we speak to leaders and architects to deconstruct the logic behind these decisions, helping you understand the why so you can make better choices for an empowered future. And for the first episode, we couldn't have asked for a better duo than the veterans we have today. Our first guest has spent nearly 30 years at the intersection of banking and wealth management. A pivotal figure in scaling Bandhan Bank's growth, he is widely respected for his unique ability to integrate insurance, banking, and investment strategies to deliver real value across market cycles. As a champion of client-centric solutions and a true veteran of the industry, please join me in welcoming Mr. Subhajit Roy, Head, Third-Party Products and NRI Business at Bandhan Bank. Our second guest is one of the most respected investment leaders in the country. He has spent over 3 decades defining India's financial landscape. Under his stewardship, funds have delivered a remarkable 18-year track record of beating industry benchmarks, earning top Morningstar ratings and recognition for award-winning investment strategies. His career, defined by standout performance, disciplined governance, and sustained innovation, offers lessons every investor can learn from. Please join me in welcoming Mr. Saibal Ghosh, Chief Investment Officer at Bandhan Life.
Thank you, Shabnam. Thank you.
All right. Like I said, the idea here is to decode insurance, decode decisions. And for us to be able to do that effectively, we will have to start by understanding each of your individual journeys. Now, between the two of you, we have over half a century of experience. If I have to be more precise,
More than that, I believe.
It's almost 6 decades of insurance. And I'm sure there must be something in each of your journeys that have brought you here today. Pivotal decisions, your own inspiration, something that inspired this journey. So maybe if you could start with that. Subhajit, if you could maybe help us understand what brought you here.
Humble beginning, I started my career with the PSU, and I worked with 2 AMCs, 1 bank, and now the second bank, and was instrumental in developing different businesses there. So what I witnessed in last, I feel fortunate rather that what we have witnessed in last almost 3 decades is that how financial planning and discipline can safeguard the interest of the customer. I think that's a critical learning. If we look at serving to a bank or a AMC or an insurance company, ultimate objective remains with the protecting the interest of the customer.
What inspired you to look at financial services as your forte?
See, at that point of time, almost 20-30 years back, the choice was limited. Choice is in abundance today, but financial sector has attracted, numbers has always attracted towards my mind, and I wanted to understand the market, how the entire money market and capital market works together, and that has brought me to this industry, and I'm lucky that got into right time into right industry, so I've been able to serve a few large organization and That makes a difference, not only as an individual but the organization where I have worked.
That also makes me think that almost 30 years ago, the industry would have been very different, even in terms of the way technology is being used. So I'm sure it was a very different journey.
Technology, yes, I can recall that when we have started our journey, the Microsoft Word was not there.
So Lotus
123 was there.
Oh.
The Word Star was there, and we used to do programming in DBase and Foxpro that point of time. I have started my journey when Sensex was hovering around 2000 level. I started my investment journey for my personal investment also from that particular period of time.
You're a rich man.
So may not be. So I have not disclosed the amount. I have disclosed only the Sensex. So that does not make any difference. But having said that, yes, the world was little different. Every decade we have seen that world has changed after introduction of mobile phone. Yes, late 90s we used to use mobile phone also for your information. But having said that, the widespread of mobile phone and then moving from a feature phone to a smartphone, that made a difference.
Sounds like a journey.
There.
Saibal, coming to you.
I have been managing people's money from day one in my career, and I'm lucky that the day I'm going to hang up my boots, I'm going to do the same thing. Yeah, to that extent, I feel myself extremely privileged and lucky. The motivation which I get is this fiduciary role. Of course, it comes with a lot of managing people's money, hard-earned people's money, and I think that makes me come to office because there's a sense of responsibility which is very, very motivating. You know, in insurance in particular, we dramatically sometimes say that don't take me otherwise. It's not in bad humor. They say that you manage widow's money.
That's
so when
true.
you manage that widow's money, what it means is that you have to
Responsibility.
manage it
That's a
conservatively and very, very responsibly. I think that's what has made me work all through these years. Thanks to market, every morning is a new morning, every day is a new day, every moment is a new learning. Yeah, I've been very lucky and privileged for the journey.
Both of you have talked about how the markets have moved or changed. And like you said, markets have always been volatile, right? Given today's situation, and I'm sure the situation has probably remained similar all throughout as well. But every day I wake up to news around the geopolitical changes that happen all around us. Gold prices increasing, silver prices increasing. There's a lot of noise around things that impact the way that decisions are made for us. Despite all of that, how do you ensure that the decisions that you make, they are in the right place? How do you block out the noise?
See, I think you're right. There is a lot of noise, and in the modern world, it is becoming increasingly difficult to manage money. Everybody is getting information almost simultaneously at any point of time, thanks to technology. So you have to process those information very fast, right? Otherwise, you will not be able to generate the performance. In fact, in today's date, the alpha, which we call is outperformance, is nowadays known as information ratio. What it means is that mathematically the same thing, but what it says that how better you are processing the information than the others. And because of that, the performance you are generating is called information ratio. So it's all about processing the information, and for that you require a method to manage this madness. Right? So there is a very strong and robust investment process, which what it does is that it filters out the noise, take out the information. It tells you the information which you don't want to know, and the information you want to know, and then you process that information for the purpose of construction of your portfolio, as per the mandate given to you by the customers. And the investment policies which we have around is to ensure that the fund managers remain in the mandate. And then comes the very robust and periodic performance review, so that you see that the fund managers have been managing the money within the mandate and maintaining the hygiene and the expectations of the customers. So this entire thing we call is investment process. So you require a very, very strong investment process to deal with so much of noises around you, not only noises,
Information.
critical information
Yes.
as well. Use it for effective construction of portfolio. I think it's a process.
So if I understand this correctly, we basically ensure that we leverage the information, relevant
Correct.
information,
Correct.
to make important decisions. So that becomes
Absolutely.
supporting material to make these
You
decisions.
have learned it absolutely correct. If you want a journey in investment, do let us know.
Thank you for that offer. Just an extended question to that for you, Subhajit. Like he said, right, there's information everywhere, and today everyone is an expert thanks to AI, Google. So I'm sure the way that you communicate with customers also becomes biased because of this information overload. So how has the noise impacted the way that you talk to customers?
That's a good question, and as a distribution from bank side, what you need to understand is that what is your customer looking at particular point of time, and from the manufacturer side, plug in the right kind of product at right point of time.
Right.
What that customer, there lies the specialization. That is the role for a advisor for this. So it can be a short term goal. It's not that always you are having a longer period of time. Somebody is having a short term. So somebody is say having a short term and want to invest into arbitrage kind of fund. Now, as a customer, it might not be aware that what is the impact of recent budget, what is going to come in terms of the STT. But as an advisor, you should be knowing that what impact is coming and how your return is going to get impacted.
Yeah.
That's the job of a advisor in terms of understanding financial advisor, is that understanding customer need, cut down all these noises and put it in the right kind of trajectory for the customer.
I think you said a very important thing, that it's important for you as a distributor to understand what the customers want, and then ensure that there is that partnership with the manufacturer or the insurer, the person who builds these financial products, so that he can deliver to those requirements. So that leads me to the next question that I have. So we are in the process of launching a new fund, a mid-cap fund to be precise.
Oh, congratulations.
Thank you.
So I am sure, given again the realities or the way that people understand mid caps, there would be a lot of gap in the way that people perceive mid cap funds to be. So maybe if you could spend some time, and we'll start with Saibal, you again, just spend some time in understanding why did we choose to launch a fund like mid cap at this given point in time?
No, I think more than the timing, what is important that the mid cap, of course, I'll come to that question as well. But the first thing is that mid cap as an asset class is a very, very important part of anybody's portfolio. Because if you see the historical return in last 5 years, 10 years, 20 years, any point of time, you will see that the most superior performance has come from the mid cap.
Right.
One of the reason is, and it has not come by fluke, there is a reason behind. Because mid cap is the most versatile part of the overall market at this point of time. Because one, mid cap is the best proxy to India growth story, because in large cap, almost half of the large cap EBITDA or directly indirectly linked to the global factors. But mid cap is purely India growth story. The second thing is that there are many sectors which you cannot play through large cap, because in large cap you have 11-12 sectors. Beyond that you can't play. In mid cap you have many sectors, right? So those kind of dynamics makes the fund manager much more creative when it comes to managing the mid cap. And also in terms of outperformance, you will see that mid cap outperformance are generally larger than large cap outperformance by the active managers.
Right.
So so overall I think mid cap is an integral part of the portfolio, of anybody's portfolio. We had a gap so far. We did not have a pure mid cap fund in our portfolio. So we are launching it. Timing, I don't think time really matters. Some people say that mid cap is expensive, because if you see that the mid cap earnings growth has always been much higher than any part of the market. If a nominal GDP grows at say 12%, you'll see mid cap grows 5-6%. Large cap a little nominal GDP growth is the earning growth of large cap, but mid cap is always much higher than that. So when the earning growth is high, you should see not on a basis of price to equity, on a P ratio, you should see it in the price to growth ratio. Okay, so from that point of view, if you see, even today, I think mid cap is quite lucrative. It has got still a lot of value left. So I think it's and lastly, I think time really doesn't matter. When you're a long-term investor, any time is good time as long as it is for long time.
Now, for an average customer, looking at this information, looking up this information may not be very easy. So, what are the indicators that they would look at? Now, of course, trusting fund managers is what we look at when it comes to investing in funds. How do we build that trust within investors that, hey, while, the numbers that you understand may not be very strong or may look a little wavy to you right now, but we understand what we're doing. So, how do we ensure that that faith
So I think
comes
one
through?
of the way they should look at is one of course, when they are buying it through an agent or through a distributor, the first point of faith is with the distributor. Okay, distributor is selling today. Whoever the distributor is, if he's been selling my product, he must have done the due diligence and,
right.
and the quality check. That's the first thing. But as far as we are concerned, because finally we are the manufacturer and responsibility is ours. I think the track record of the fund management. Now today the Bandhan Life has got 18 years of track record, and that's in public domain. The second thing is also there is a very strong disclosure of the portfolio which comes every month. If the investor wants to know what is the value of his fund, where the fund has been invested, which are the stocks, which are the sectors, every detail is available in public space. So I think these are the endorsement of a trust. And frankly, there is no magic wand for trust.
Never is.
Right? The trust is a long-term
Journey.
built up over a period of time. So it will happen over a period of time as the numbers coming in. So I think it's a gradual and continuous process.
Subhajit, a similar extended question to you. So, like Saibal said, that we are looking at you as the distributor, the first point of contact with customer. And I'm sure the most of the customers that we deal with today may not necessarily be in the right frame of mind to understand the difference between each, which is where the trust in the seller becomes very important. So, do you think something like this is relevant and important to the audiences that we're catering to?
No, this is very important to understand that we should not consider the customers are not aware. If we look at the kind of demand growth in the industry has happened in 5-7 years, the kind of rapid growth we have seen in derivatives trading in from tier 2 tier 3 cities, and there are subsequent measures came from the regulation side to curb that. I think it is going to be a little bit difficult to say that customer don't understand. Customer do understand, but mid-cap is a story. It's a long-term India growth story. Mid-cap is a story of aspiration because if today India is looking at high disposable income, India is looking at affluence level is climbing, a huge number of mass affluent customers are emerging in tier 2 tier 3 cities also. They are coming for investment. If you look at even if FI investment is slowing down India in different point of time, as a country we are resilient in terms of our only contribution from SIP. So that kind of environment is there. As a distribution community, what we need to understand is that where the customer is having that risk appetite for a longer period of time. Because for a ULIP, it's not a 1 year story. It's not a 2 year story. It's not even a 5 year story. If you look at for a 10, 15, 20 years, for a longer period of time, that kind of investment as a habit can make a wonderful difference. This is a right combination of insurance, wealth appreciation, and also the attached tax benefits, what is there in the new tax regime for that. But having said that, and this insurance component also gives you an opportunity to stay invested, because your incentive for the investor also goes for a longer period of time. Your all these charges waiver, your fund management or allocation charges also getting waived over a longer period of time. Wise investors who are having a long-term outlook, having capability to stay invested in the market for a longer period of time, I think that's going to be a good story. Yes, one has to have that appetite of risk. Short-term market will remain volatile, and it is said, not by me, a great man in finance that short term your market always behaves like a voting machine, but long term it's a weighing machine. So it will continue like this.
I love the analogy. But I think it's very beautifully said that instead of looking at mid caps as another fund, audiences need to look at it as a part of India's growth or emerging story.
And also to add to what he's saying is that from an asset allocation point of view, from an asset allocation point of view, this is one of the assets. How much you need to allocate is depending on your risk appetite. And having said that, younger you are, that's my belief, younger you are, more and more mid-cap you should have, because your risk-taking ability is that much high. And you can hold that much longer. Because longer you hold, more wealth creation it is going to do for you. Yeah.
The next question is a little unique to us insurers. In the industry or in a spectrum where customers are spoiled for choice when it comes to financial instruments, we've got way too much innovation also happening. In short, in a couple of lines, if each of you could tell me why you believe ULIPs deserve a space in a investor or in a financial planning by an individual.
It's a beautiful product for the long term, but short term somebody should not look at this kind of product. You should have the right kind of risk appetite to commit for a longer period of time. But if you stay longer period of time, you are enjoying a benefit of wealth creation, because it's not that liquid. Insurance structure, you need to understand, it's not that liquid. For a ULIP fund manager, ideally the fund is going to stay for a longer period of time. He is going to have more time to take a long term 5 years, 7 years call even for a stock. That's going to give you a better return. Ideally, that should be given a better return. And associated tax benefits should be part of the investor portfolio, should have the appetite towards it.
Fair.
So he's saying that ULIP managers have much easier job than the mutual fund manager.
I'm not saying that. I'm saying that we're having a more confidence because
he's right.
Because that is going to give you more legroom to play.
Fair point. I think just to add to what Subhajit has said, that one important thing what he mentioned from a distributor's point of view, and which we believe also as a manufacturer, that at the end of the day, wealth is created not by a single fund, not by a single stock, but on the basis of their asset allocation, the right kind of asset allocation. When you do a ULIP and you have the holding capacity for 5 years and above, it is a great product to have. And of course, since we are talking on this platform, I'll talk about our product. See the the charges and all, which are very, very efficient, and the charges get diluted over a longer period of time.
Yeah.
The advantages are two. One is in terms of asset allocation. At any point of time, you want to switch out to any other kind of asset class.
Yeah.
You can do it almost tax-free, right? And it's innumerable switch in, switch out you can do.
And that's very unique to.
I mean that's one advantage they have. Secondly, in the unlikely and unfortunate event of the policyholders' demise, at least you are insured about the minimum of sum assured and the fund value, right?
The goal is protected.
Yes,
So
so your basic thing is protected, right? Even if something bad were to happen, your basic sum assured is protected. So to that extent, even think of a situation where the market is 40% down, but your sum assured is protected.
It's there, yeah.
So yeah, I think to that extent, ULIP has a great value. But I would also like to suggest that whoever is buying ULIP, they have to understand the charges very well, and then their expectation will set right.
I think it has also evolved
Over
the years.
Correct.
Because the way the product was structured, it was having some stigma. I think with regulations came into picture, and also the competition came with innovation. I think this product is having its own brand equity.
I agree.
We'll move to something that's a little bit quick. So we're moving to something called as a rapid fire session. Now here I'm going to ask each of you or state to each of you a sentence, and I want you to say if that's a myth or if it's a reality, and then of course if you want to add something to that. Alright, so we're going to try and keep this quick. We'll start with you, Mr. Roy. The first one is life insurance is important only once you have responsibilities.
It's a myth.
Definitely a myth.
It's definitely a myth because everybody is having one way or other having some responsibility.
Right.
If not with others, for protecting himself for a cause. We are all living for a cause, right?
Yep.
You rightly said. That's a great perspective. The second one is life insurance is very complicated to understand and to buy.
That's not a reality. I don't agree with this reality. It also remains a myth because it has got evolved. This is not a very new product. This product exists almost now 60 years in the industry. It has got evolved in the system.
So can we say that the category has evolved and become easier, but the perception is yet to catch up?
I think it's all about the lens, how we are looking at it.
Maybe this podcast is going to help.
Let's hope so.
Yeah.
All right. Next one is insurance is fine for protection, but it's not meant to grow money or build long-term wealth. I think we've sort of answered that through this entire podcast, but just to say it out loud.
It's a combination because insurance companies are largest investor in GSEC market. It's not only protection, it's not only investment, it's a combination of that.
Of both.
And not only in debt plus equity. I think that exposure continues for our investment fund management for an insurance company. It serves the boards.
I don't understand how markets work, so ULIPs are not for me.
You don't need to. That's why you have a fund manager like Saibal and his team.
Yeah.
A fundamental understanding is required, but go to the day-to-day
Correct.
Day-to-day tracking and then picking up stock, it's also not going to be that easy and time consuming. I think job of a professional fund manager is to take care of this with some cost, which varies for a longer period of time how it is coming.
The investor just needs to be ready to ensure that they're in it for the long term. Last one for you. ULIPs lock your money and give you no flexibility.
Lock-in is having negative if you are having short-term requirement. Lock-in has a big benefit if you are locking it for a longer period of time and yielding better yield. So it's up to you to decide that whether you want to go for a longer period of time, you lock money, you yield better return. Short-term investor, it is not the product.
Very well said.
So it sort of helps with the discipline as well. Saibal, next for you. Markets are already high. It's probably too late for me as an investor to invest.
No, I don't think that's right. As I said, any time is good time as long as it's for a long time.
How would you define long term?
3 to
15
5
years,
years.
20 years?
3 to 5 years.
3 to 5 years. Oh, not bad. If I'm investing for the long term, market ups and downs shouldn't matter to me as an investor. I think you've already answered that. Yeah. If I invest at the wrong time, long term investment won't really help me.
Again, the same answer. All answer is lying in that particular statement.
Mid cap means a small company. Small companies mean unsafe.
No, it's not right because the smallest of the mid cap is around 25,000 crore market cap. So
25,000 crores.
small.
So what is the range of mid cap company?
It depends, huh? From 101st to
200.
50th company is a mid cap.
So the range is quite vast.
Very.
New funds don't have a track record and so they are automatically riskier.
The fund managers are not new. They have been there in the system for quite some time, right? The process, system, the track record, the experience, the expertise,
Right.
that has been there for quite some time. The fund may be new.
But the people managing are not.
In that logic, every new car is more dangerous, right?
Very well said. All right. So moving on to our second last segment. Here I will say a sentence out loud and I will need you to complete that sentence or fill in the word for me. I'll start with you, Mr. Roy. Complete this sentence. Most customers actually delay financial decisions because...
This is a human behavioral pattern. Taking any kind of commitment in life, you try to defer it. Right?
Procrastination.
Procrastination is the right word.
One question customers should ask before buying financial instruments is?
What is my objective? What is my goal?
I think that's a very strong one. People usually regret dash more than they regret dash.
They mostly regret if you're missing the market momentum, and what they don't regret or don't understand that in the process their discipline is gone away.
A product works well for a customer when dash and it does not work well when dash.
Works well when he sticks to his initial goal, ambition, objective towards the investment, and it does not work out if it mismatches. Somebody is having some leverage money investing for a short term, market is not reacting towards it, is gone.
One thing people usually get wrong about insurance or investments is?
Insurance and investment can be combined like a product like ULIP. Insurance and invest can also be detached in terms of taking a pure term and you keep your investment running. It's up to the customer to decide what is going to do well in his or her asset allocation and portfolio construction.
All right, Saibal. Complete this sentence. In 2026, smart investors will.
Continue to invest.
The most overrated metric in investing is.
Return.
And the most underrated is.
Risk.
One behavior change that can add 1 or 2% to long-term outcomes is.
Discipline.
The most common mistake customers make with money is.
Procrastination. Taking late decision.
If I were an RM or a seller, I would explain mid-cap as.
I'm not an RM. Thank you.
Okay, so if you had to sell mid-caps to someone, how would you sell it in one line?
It is the best segment of the market in terms of risk return metrics
A ULIP is right when
for long-term investment.
and wrong when?
When you
Short-term.
want to, yeah, you have the answer. So yeah.
Alright, so coming to the last part, now here we would leave our viewers with something that they could take forward with. So if you were to give, if each one of you were to give 3 practical advices or rules for 2026, and this could be across protection, investments, wealth, what would that be?
Start early, keep a plan, stay invested, do not discontinue with your SIP, do not forget to pay your insurance premium, and if you have to take some controlled approach towards your expenditure, do that, but stay invested. I think that's very, very fundamental. Market ups and downs will continue.
Yeah.
What is important is not the time.
Timing,
That is
yeah.
very important.
Correct. Don't-
And that plays magic in the longer period of time. So whatever, if you have the appetite for short-term volatility, one can take it. But if you want to have a good, not a work life, investment and life balance towards it, then put your money in a basket of asset, what is going to give you a better return in a longer period of time, and stay protected. That is very important. Consider yourself as an ATM. Every month you have to take out some money from yourself. So protect that ATM and take the health protection, because that's a cost. That's a huge cost and it is going to grow up from here only.
So we're saying start early and start with a plan. Second is ensure that all your bases are covered, investments, wealth, protection, all of it is well covered. And third is stay at it.
Stay at it.
He said 3 more actually, that's on my behalf.
Nah,
So-
we will ensure that we get your bite as well.
Don't invest in something which you don't understand.
Trust the people.
You
that
understand the
you're talking
product, you understand the risk metrics, you understand the upside, you understand the downside, and then only you invest.
to. So do
Keep
your
your
research.
expectations right, yeah.
Do your research first.
Absolutely.
I'm sure for that, it starts with starting with a plan and then ensure that
Sure.
you've done your research.
Understand the product, that's
Yeah.
very important.
Thank you so much. I
All
think this
right,
was
thank
really
you
good.
very
Thank
much.
you.
Thank you.
I appreciate
Thank
the
you.
time each one of you to do
Thank you
this with
so
us.
much.
Thank you.
Appreciate
Thank
for
you.
your time. Thank you guys. All right.